Terra Luna, the UST fake. What happened? The meltdown. Binance holds Terra withdrawals amid UST meltdown. Key takeaways. Binance has halted Luna and UST withdrawals, citing high volume of pending withdrawal transactions. UST spiral as low as 62 cents on Binance early Tuesday, while Luna crashed to $23. They've slightly recovered in the last few hours. The cryptocurrency community had mixed reactions to what's been one of the most dramatic events in the past few months in this space. Terra wows escalated early Tuesday as UST plummeted as low as 62 cents on Binance. Binance response to UST crash. Binance users holding Terra are facing a problem. The world's top cryptocurrency exchange announced it had halted Luna and UST withdrawals early Tuesday, responding to an unprecedented stablecoin crash that's rocketed the cryptocurrency market over the past few days. Withdrawals from Luna and UST tokens on the Terra Luna network were temporarily suspended on the 10th of May at 2:20 a.m. UTC due to a high volume of pending withdrawal transactions. This is caused by network slowness and congestion. Binance wrote on its blog, Terra's flagship stablecoin, UST, lost its peg to the dollar yet again late Monday, falling below 95 cents and then plummeting as low as 62 cents on Binance hours later. It posted a swift recovery early Tuesday, but yet to return to its intended $1 price, currently trading at about 87 cents amid the crash. Terraform Labs CEO Don Kwon assured the Terra community that the issue would be resolved, deploying more capital. Steady lads, he added. USD continued to plummet in the hours following his post, while Luna Terra's volatile token briefly crashed $23. It's currently trading closer to $30, down 73.1% from its all-time high recorded on April 5th. Don Kwon tweeted, deploying more capital, steady lads. But before we continue, have a look at Bitsgap. Smarter way to automate your crypto trading. Best crypto trading bots, algorithmic orders, portfolio management, free demo mode, all in one place. And the benefit of the Bitsgap grid trading bot is yesterday with Terra's dump and crash, as you can see, USD against Binance went all the way up to $41,000. Now, humanly, it was unable to keep track, but having the USD Binance Bitcoin bot running, the orders went smooth and through. So back to the news. The house jack of USD and what lies ahead for its lunatic cost. Stablecoins rose to fame following the trust factor. The value of stablecoins is based on a people's trust in the company holdings the collateralized reserve asset, but the trust may be wavered on occasion. The third largest stablecoin by market cap, Terra USD, appears to be in house as it continues to lose value against the US dollar. In fact, stablecoin Terra USD or USD dropped to as low as 67 cents minus 7%, following a wave of speculations and stir within the crypto community. The making things worse, the said free fall caused massive liquidations on leveraged positions, thereby dropping its market cap to 12.3 billion according to CoinGecko's data. At press time, USD, despite the recovery phase, was hovering around 90 cents. The trust factor didn't quite align with the set uptick. It's important to note one concerning fact here. This incident invited speculations against USD, decentralization attribute. As should tweeted, no matter how this ends, I don't want people to call USD decentralized again, even the little collateral backing it as is. intransparent and controlled by a single party, used to perform discretionary open market operations. This is like 10x worse than the Fed. Meanwhile, Don Kwan, founder and CEO of Terra Luna, tweeted that he was deploying more capital, and this did happen within a gap of a few hours. As reported by Wu Blockchain, the Luna Foundation Guard did transfer a massive chunk of coins to stabilize the situation. The Bitcoin address of the Luna Foundation Guard has just transferred 28,205 Bitcoins to Binance, and the balance of the address is now zero. The address transferred 42,530 Bitcoins out earlier today and then transferred 28,205 Bitcoins in. Prior to this, the organization announced that it would lend 1.5 billion worth of Bitcoin to offset the fall. Both these transactions incorporated as an aligned aim to help Terra USD regain its intended parity with the dollar. Post this, Terra stated that regaining the price peak takes time, but it bounced back. But at Luna tick cost, the market cap of Luna, Terra blockchain native asset, fell lower than USD. This could significantly insignificant funds in the Terra project to probably back the value of the algorithmic stablecoin and maintain its peg. Even though USD did showcase some recovery, Luna witnessed major bloodshed. The 14th ranked native coin shed as much as 50% in 24 hours, primarily because Bitcoin balance of Luna Foundation Guard address fell to an all-time low. That said, Binance, the largest crypto exchange, halted withdrawals of Luna and USD tokens on the Terra Luna network, mainly due to the high volume of pending withdrawals transactions caused by the network slowness. As we can see here, Terra Luna drops 52% in a single day. Multicoin analyst. Bitcoin had been trading inside the ascending parallel channel since January 21st on May 5th. It finally broke down from it and greatly accelerated its rate of the decrease. Now this caused the major upset we started seeing happening. And if we go down, is there hope for Luna? Luna has been falling since reaching an all-time high price of $119.55 on April 5th. The decrease has been swift and it greatly accelerated on May 9th when the price decreased by 52% in a single day. It is possible that the decrease occurred as a result of the depegging of the stablecoin USD. After the drop, Luna bounced at the $25 horizontal support area. If the area fails to hold, the next support levels would be around $6. Now, if we go back onto the Luna, you'll see that $6 is more or less the area where Luna were at for more than 2 years before it finally rose up. Is it going to go back down there and stay there for another 2 years? Or will the peg return to $1? Here's how crypto's third largest stablecoin, Terra USD, collapsed. The world's third largest stablecoin, Terra USD, depegged from the US dollar, trading as low as 62 cents on Tuesday, a loss of over $4 billion in market capitalization. USD primary backing asset Luna lost $20 billion within 7 days. People using its DeFi ecosystem, holding $29 billion in deposits just a few weeks ago, withdrew another $16 billion. Terraform Labs, founded by South Korean and Singaporean billionaire Do Kwon, claims that USD is able to maintain a peg of $1 using algorithmics rather than holding US dollars in reserve like traditional stablecoins Tether or Circle USDC. To maintain USD's peg, it depends on incentivizing arbitrage rates for its balancer, Luna token, and various assets traded by discretionary wealth managers, all while somehow claiming to be decentralized. In reality, 7 managers make most decisions about transfers, liquidity, and trading its assets reserve. Who has been gaining while Luna has been dropping? Maker up 11% despite Terra's CEO pledge to kill DAI. Key takeaways: Maker, the governance token of the Maker protocol, has risen 7% Tuesday. Maker appears to be benefiting from UST recent depegging event, which saw the dollar-pegged asset slip to lows of 66 cents. Maker's price jump may indicate that for some investors, the safety of DAI is preferable to the increased risk of holding UST. Maker is one of the only handful of cryptos assets in the green today. The protocol behind the DAI stablecoin appears to be benefiting from the downfall of its closest competitor, Terra USD. Maker defies the market. As USD struggles to regain its peak and Luna plummets, one token is climbing higher. Maker DAO, Maker token, is up 11% today, standing out as one of only a handful of crypto assets to register gains amid a turbulent market. The early DeFi asset rise comes as its largest competitor, Terra algorithmic USD stable, has been struggling to maintain its dollar peg. USD dropped as low as 62 cents on Binance on Monday, following another deep peg event over the weekend and subsequently emerging plan from the Luna Foundation Guard to deploying 1.5 billion to market makers to protect the stablecoin's peg. Although it's slightly recovered in the last few hours, not yet returned to $1 at press time. Maker is an Ethereum-based DeFi protocol that lets users mint a decentralized stablecoin called DAI. Users can lock up a range of volatile assets such as Bitcoin, Ethereum, or liquidity positions on other protocols such as Curve to mint DAI stablecoins. All DAI loans must be over-collateralized, with the ratio varying depending on the deposit asset. Now you can read the entire article, but it comes down to it. Are Maker an option to basically leverage again? If you have UST and Luna, DAI and Maker might be an option to equal each out. What's your thoughts? Leave me your thoughts and concerns down below. Hit and smash that like and subscribe button. And have a great one.